Is the market gearing up for a massive squeeze? The dollar's been rising. The 10-year yield has been rocketing higher. They typically have a negative correlation. What the heck is going on? This is even as the Fed cut rates and the market is pricing in another 50 basis points of cuts by year end. Despite typically spooky election year seasonality, the market is sitting at all-time highs with sentiment at extreme greed. Inflation just topped expectations. Consumer confidence is cratered, but retail sales remain resilient and job creation continues to surge. With the election just 17 days away, it is a wild mix. So let's dive into what all that means for your trading week ahead on today's Stock Market Brief Show. Let's get into it. Welcome back, everybody, to the show. We have timestamps in the description below. We got a lot to talk about. We're going to talk about the performance of the markets. We're going to talk about some indices and ETFs. We're going to talk about the current market conditions, which is the throttle of when I push down the throttle for more exposure into the markets and when I let off the gas a little bit. We have expected moves on deck, dollar, commodities, and we're going to get into some bonds and yields and, of course, some crypto, because why not? Okay, because why not? We're going to start over here with performance. So let's go ahead and take a look at the last week of performance. Look at the market is sitting at all-time highs. And utilities was the number one performer this last week, which is typically more of a risk off. But you can see that this was kind of a rate-sensitive week. You got utilities, real estate, and financials. And I must add to that by saying that we are moving into not only the election year, right, all that good stuff, but earnings. We have big earnings coming up on deck. So this was the performance of this last week. Down towards the bottom, you have energy, healthcare, and technology. You laggard over there. We'll compare that with the S&P 500 momentarily. Let's take a look at some additional products. Bitcoin was the top performer on the week, up 10%. BIDO, which is 8.57%. We're seeing things like silver start to take off. I mean, this market is all over the place. Take a look at month-to-date performance over here. You got Bitcoin and silver leading the way, and then you have the 10-year yield up here, which typically when you have a rising 10-year yield and a rising dollar, it puts pressure on the market. So there's a lot of confusion going on here. So it's going to be important to really pay attention to the absolute performance of these various indices and ETFs that we get into, because there are things that are setting up that if we are going to get some sort of a squeeze into year end, these may be the ones to pay attention to that have potential, that haven't seen the necessary attention on the mainstream, but perhaps might be there. Now I want to start off looking at a yearly chart. This is each candle represents 1 year here. And I'm just putting this to put you in context, to give you like a bird's eye view of really how psychology works around trading. Okay, I just want to be like forthright and clear. Everybody gets bearish when we're at all-time highs. Like it's typical, right? You get a lot more bearish things pushed because bull markets, they do climb walls of worry. But you got to understand that if you're just bearish all the time, you're trying to catch the big crash. And let me just be quite frank here by showing you this chart. Everyone wants to catch the big crash, right? Everyone wants to call it out because of the Hollywood effect. They made a movie about it, The Big Short, and various other ones or whatever. But the real money is made on the moves up, right? It's all about protecting your capital during these extravagant times when big money is like, the market's falling apart. But just take a look, right? Everyone wants to catch a big crash, but the real money is made here. Boom, we've ripped up higher. That's the opportunities. And I just want to, I'll show you my P&L performance for this last year in the United States Investing Championship. For year to date, I'm about 40%. For the last year, surpassed that. I'm near 80% up year to date. And this is all because of really just the market has been moving in one direction, okay? So things have been working out. Things have been a lot easier to make money. So when times get more difficult, you need to be aware of when that happens, when the conditions of the market change, so you can let your foot off the gas a little bit and protect your capital. Now, if I actually clicked over to the 3 years performance of that, you'll notice that during the hard time in 2022, it wasn't until a little bit later in 2023 when I actually started putting my foot back on the pedal. So my P&L curve basically went like this and then it started picking up because I knew not to mess with a lot of the volatility that was taking place because my positions stopped working as good as they typically do in a more positive environment. So I wanted to just preface that because that is paramount if you are trying to trade and invest, to know when your system and your strategy is not working, to not push harder, but to let your foot off the gas. And when things start working again, then you start adding more fuel to that fire. Let's take a look at the SPX on a weekly time frame. The structure of the SPX is getting rather steep, right? The trend is getting very, very steep, and steep trend lines don't typically last. They typically break and kind of reset. We are getting some negative divergences. We've seen negative divergences in the past lead to market sell-offs. So be open to that. But this is the weekly time frame. Is it going to happen tomorrow, right? Or sorry, Monday? Is it going to happen this next week or the following week? We don't know. Okay, if I apply the Qs underneath the S&P 500 on the weekly time frame, I just want to point out there are times too where the S&P 500 outperforms the Qs. You can see it put in a higher high to new all-time highs, but the Qs did not follow suit there. And sometimes when this is the case, it could be the market saying, hey, we may see weakness up ahead. And I wanted to call that out because the S&P 500 is pushing higher and higher here. And despite we are coming into election year and we're coming into big earnings, and the Qs have not done so yet. So the Qs, right, we're right there. The Qs, if the market is going to press higher, say if the S&P 500 is going to go to 6,000, which is a key level we'll get into, I feel like the Qs are they're going to need to have to participate in a move like that. Okay, the IWM hasn't gone anywhere since 2021, right? We had the big old burst move on the unlimited QE. We went into a massive bear market. We chopped around. People got so excited multiple times. And now we're back up here to a closing weekly high that we haven't seen. I mean, actually, is this the highest? No. We had a higher closing weekly high right over here. But it's one of the highs for the IWM or the Russell 2000 as it's kind of breaking out of this consolidation pattern. Now, I want to go into some index or some spider ETFs that do look like they're setting up that we got to keep an eye on, because if the market all of a sudden finds a fancy to start, institutions to start putting money behind some of these names in here, we could be in for a nice surprise. I'm going to start off with the ARC Innovation ETF, and we've been seeing this build up higher lows, and price action is getting rather tight here on the weekly time frame. You can see the 10-week moving average starting to curl itself up. The 40-week, which is roughly the 200-day moving average, we're above it, but it's rather flat. So I'm looking at this, and you can look at it from the daily time frame, but you can potentially see this as a trend line that's been holding, and now we're getting kind of 4 or 5 weeks tight right here. And if this wants to start breaking out, this could present itself as the early part of a stage 2 markup, where markets move between 4 stages. You have stage 1, which is accumulation. That would be the guess about right here, right? Stage 2 would be the markup. That would be the hope to where we're going if you want to go long. Stage 3 is distribution, which happened over here into 2022. And then stage 4 is decline, which clearly was over here. And decline stages can last a long time. And you can see price action has kind of been building a potentially longer term base. Now, if we start getting underneath this type period of contraction, give it more time and see what happens. Take a look at retail, XRT. This one is interesting to me because also we broke out of this kind of consolidation, this longer term, maybe potential accumulation pattern after the decline phase. And is this the potential early stages of the markup? And we're building the first bigger base over here. Well, from a weekly perspective, if you're looking at XRT or any of its components, you'd be wanting to watch to see if we get a base breakout and see if it can kind of double that base breakout and head to all-time highs, and then kind of trail the price action there. But if it starts breaking down, obviously, then you might want to let your foot off the gas there. Take a look at biotech. Also another one that hasn't really seen much attention at all. Some individual names have been seeing quite a bit of attention, but XBI or IBB, you can see that price action is building a base here of a series of higher lows into this pivot of about 102.50. So this is another one that if we can tighten up and start breaking out of this, perhaps we're going to get some more eyeballs on this to really set forward a new bullish markup phase. XTN is a spider ETF for the transportations. And I put a video out about Boeing not too long ago, but in the movie of Boeing, the stock that everyone hates, I talked about the airline industry and how it's this part of the year, it's into year's end, is pretty bullish seasonality. Now, transportation is much more than just flight. There's other aspects of transportation, so I would encourage you to look into the various parts or holdings within the transportation spiders. But I'm showing you this because also, once again, you can see these higher lows being built. And we're starting to kind of break actually from this right now. So if we can kind of move like such, maybe it sets the stage to retest some highs here in the near future. So those are some of the areas that I'm kind of paying attention to amongst other individual names. But I wanted to kind of show you those because you can go into the holdings of each of these and maybe you find some individual names that you like or maybe that you already have in your portfolio. Let's now take a look at market conditions. I want to start off by looking at gamma exposure levels. And I want to call out that there is a tension now over here at 6,000. People are eyeballing it. Traders have some exposure out there. It looks like it's setting up for a test at some point. Could it be very soon? Could it be a little bit later? I don't know. I couldn't tell you. But what I can tell you is this, is that's where the attention's going to. As it stands in this current moment, 5,900 is the call wall. That's where all the majority of exposure is. But I wanted to point out that there are traders still reaching out further. And we are in positive gamma territory, which is roughly at about 5,800. So when we're above the gamma flip line, this is where dealers look to buy the dip and sell the rip. It's typically where volatility comes in. Okay, and then on top of all of that, we're above a rising 5-day moving average in the short term as it stands. We like to get more cautious when it starts to turn yellow, when price gets below it. And then basically when it starts declining, you kind of want to ignore it like XBI over here, right? And you want to be more patient until it starts putting in some higher lows and start breaking out. So semiconductors is the only one right now below the declining 5-day moving average. The Qs are rather flat. You can see it's actually contracting right here in a compression pattern. So a breakout may go retest these highs, but watch for a potential breakdown because that could mean that the trend could be reversing. IWM is above its rising 5-day moving average. The Dow Jones Industrial Average has a little bit of a negative divergence here in the RSI. And then biotech has been consolidating over here right above its rising 5-day moving average and these prior anchor volume weighted average prices. So the market is basically saying, hey, we're bullish right now. We're above a gamma flip line. Some of these index products that we look at are above a rising 5-day moving average. So all systems go. If this changes, then just be aware of that. And it doesn't necessarily mean short the market, but it may mean to potentially take your foot off the gas and maybe stop adding exposure and just manage the current positions that are working for you and cut the ones quickly that are not. Let's take a look at the expected moves going into next week. So first and foremost, let's take a look at the SPY. This is the one that I like to track here and to share with everybody. If you're in the Discord, I obviously share a lot more other products. I did just drop a new indicator that shows you the daily volatility implied move based off of the volatility index of various products. So if you want to see that indicator, you'd have to go over to my Twitter page. It's the pinned comment. I made that available to everyone to apply on both Thinkorswim and TradingView. Now, the weekly expected move is $7.07. As it stands right now, that's plus or minus. So that would be the upper and the lower level. I'll give you the specifics here momentarily. What I'm calling out here is that now we went 4 weeks without touching it. And just all of last year and this year equals to and around about a 75%, 76, 77% probability of always tagging that. So it's very rare not to tag our weekly expected moves. And what I've noticed here is out of the last 4 weeks, this is the smallest week as we're in positive gamma territory. So my thought is that we're probably going to be touching it this next week, potentially even more so because volatility is coming in. Volatility typically contracts and then expands. So what we're seeing here is the contraction. So I would say it could be very soon where we hit one of these levels. Now, if I bring up the SPY 15-minute time frame here and show you these moves, the upper weekly expected move is at 591.66. The lower weekly expected move is at 577. So you can mark these on your screen. Remember, if you think of this in terms of a distribution curve, 68% of the time, one standard deviation, it closes within these levels. And there's a higher probability that we tag, right, one of those levels. Now we have the daily expected move here at 581 to the lower, 587.38. But then I included the daily VIX implied move as well to give you more of a zone or a range of the high end of going into tomorrow's trading session, or sorry, Monday's trading session, and the lower end of Monday's trading session there as well. If we start breaking further down, okay, on coming into next week, pay attention closely to the quarter to date anchored volume weighted average price, because if this undercuts it or comes up and we start holding and seeing higher lows, it could be just a quick shakeout before potentially heading higher. So that would be a level that you'd want to watch. And now remember, if we crack down under there, we'd also be below a declining 5-day moving average. So you'd want to see what price does, how price responds, but these could be key levels that you can potentially play into or play off of, depending on what it looks like if price were to actually come down there. Now, if we get a squeeze, if the market all of a sudden just rips to the upside, October has an upper monthly expected move up here that we have not tagged at 595.37. So for whatever reason, if the market wakes up on a roaring whatever next week early on and we come way out here, I'd be very hesitant to be adding more exposure on a very extended move, because I would imagine that it would come back in to retest some levels or come back even in further, kind of like a bull trap type of move. So those would be kind of what I'd be anticipating and looking for going into this next week. Let's take a look at the dollar. So the dollar has been on a monster move. And the reason why earlier I stated this is the market setting up for a big squeeze is because typically you have a negative correlation with the dollar, right? The dollar goes down, the S&P 500 can go up. That's what we typically see. But lately, the S&P 500 has been pressing to new highs despite the back of a rising dollar. And the dollar is fairly extended here. So my thought is if the dollar does come off and it comes off quick and fast or breathes, will that give a fighting chance for the S&P 500 to squeeze through and try to retest, or try to test that 6,000 level? And if not, the S&P 500, well, there are commodities that have a negative correlation too. So let's talk about those commodities. Gold just hit a new all-time high. All right, gold has hit, let me be very clear here, which is so weird about all of this, is gold hit a new all-time high despite the dollar flying through the roof. So if the dollar comes off, is gold going to even squeeze potentially more? So what is the market? That's what's so crazy right now. What is the market trying to tell us? Is inflation coming back? Does the Fed not have it right? Are we on pins and needles because of the election? Are we trying to get through that? And then the market's going to make it more clear of a move? I feel like there's a lot of narratives out there, and I think you just need to kind of set back from the narratives and watch how things kind of play out and go from there when some of this stuff passes, and just be on the right side of the trend. And when the trend changes, well, make sure that you're just out or you're moving to the side until the market fully digests the change in shorter term trends. Take a look at silver. Silver had a day that it was up 4.59%, breaking to a new yearly high over here. Not an all-time high, but a new yearly high on some decent volume here too. So this is another one to watch. Is this the start of something bigger here, breaking out of this? If it is, I mean, buckle up. But what is the market trying to tell us? And if it's going to continue to go higher, will it be able to do so with a dollar that holds rather elevated because of these negative correlations? Another thing to watch is copper. Copper came back to this prior area. We saw a nice squeeze up. We pulled back like so, and now we saw a little bit of strength the prior trading session. So is this just a quick pullback to potentially higher copper prices? And if so, I'd be paying attention to things like China, right? On Twitter, I posted this on October 17th. China got a big hit to the downside here. I wanted to call out basically that there is a strong correlation between copper and China, which for the proxy for China, I'm just using KWeb. But my thought here was pretty simple. If copper is just pulling back into this rising 50-day and we're going to start to bounce from this level, is China names going to follow, right? We saw this huge squeeze and this big retracement. And yeah, the very next day, we saw a nice little pop in China names. We'll see if it holds. We'll see if copper holds and see if this correlation continues to remain in the positive. But if it does remain in the positive and copper actually, this is just a pullback, yeah, I would imagine we'd see some various China equities continue with that, or some emerging markets like EEM, right? A big portion of that is China. Take a look at oil. Oil, what is oil trying to price in here? So oil's been falling off. We saw a nice big move, and this got retraced. And typically when you see sharp moves to the downside, if this is going to continue downside, it could be the market pricing in, hey, we see fear up ahead, right? Falling prices in oil can potentially indicate that we're going to be seeing growth slow down. Typically, when you get a huge spike, right, big price movements in oil, those have led to big recessions dating back all the way to like the oil embargo And it's when oil starts falling. So what is oil trying to tell us? Overall, it's just kind of been going sideways. But what I find interesting here is when we do look at bonds and yields, because the 10-year yield has been on a monster run, right? In very short time, this is coming after the Fed really cutting rates. And yeah, there's some geopolitical tensions too, clearly. However, what I do find interesting is this oil has been coming off. Is this indicating just a pullback before ripping up higher? And or is the 10-year yield going to follow suit like it typically does shortly after? You can see as we topped over here in oil, the black line, and started heading down, 10-year yield followed shortly thereafter. And you can see there's a pretty tight correlation, right? Oil started to find a bottom here. It spiked. Boom, we ripped up higher. Then it came down. The 10-year yield came down, right? They spiked. Boom, spiked from here, from this low. And then the 10-year yield shortly thereafter followed. So if the 10-year yield all of a sudden starts backing off, that'd probably be a good thing for various bonds. And once again, back to the potential of a big squeeze, if the dollar comes off and the 10-year yield comes off and it goes back into that correlated state of the markets, that could be potentially a good sign for a Q4 Santa Claus type rally. So that's kind of where my head is at. I don't know if that's going to be the thing that plays out, but I mean, these moves are intense, and we got to continue to watch them and monitor them as time goes. The 10-year 2-year yield curve did uninvert, right, as the Fed's cutting rates, and that's typically not a good sign for the markets. Looking back through history, I mean, that's what happened going into the pandemic. It's what happened going into the financial crisis. It's what happened going into the dot-com bust. But the 10-year 3-month yield curve and the 20-year 3-month, the 30-year, those are still inverted. So we're watching this as they are steepening. We'll see if they begin to uninvert, because that also would be potential negative signs or an early warning sign for the market, seeing these curves starting to steepen. Let's hop over into some crypto. The Sailor to Shift tool did give us a buy signal and officially a buy trigger this last week when it crossed the high of the prior trading week. So it went from about 64,500 to up and around 69,000 on the trigger. Obviously, it crossed through the buy signal a little bit earlier than that. The trigger is a strategy that I use, but anybody can do whatever they want. So let's go ahead and look at some of the just various crypto products. I'm not going to look at the equities today, but Bitcoin is starting to try to break out of this downtrend over here. So if it comes up and starts to really gain some momentum, this could be a good sign to retest these prior highs in the near future, up there in and around 74 to 75,000. Ethereum is getting very tight here on the right-hand side, and some might look at this and say it's an inverse head and shoulders. And if that's the case, I'd be looking for a target of around 3,000 to 3,200 in the near term before we run into some of that prior you could see as prior support, and then prior support here and around, prior support right here and right over here. If I drew it back further, it would have been a prior resistance. So up and around this 3,100 to 3,300 could be a potential level where we kind of fly to if we're going to get more price action there. Solana is another one here that I'm keeping an eye on. You can see it is consolidating, starting to move through this 160. You can see this might be also building out a little bit of a base or an inverse head and shoulders to go retest up here at about 185. So buy signal, buy trigger, at least that's how it stands right now. Things can obviously change quick, so you got to manage risk how you see fit. Today, we went over the expected moves. We went over the various things that are interesting about what's going on in the markets and kind of why you shouldn't have a strong opinion, because it looks like anything could potentially happen. We talked about the conditions of the market, how they are currently bullish, and that's a good sign. Until that changes, obviously, we'll be here, so you can watch the next video. When things change, I'm going to be talking about it. Hope that helps. See you later.